Ladies and gentlemen, good day and welcome to Prudent Corporate Advisory Services 2QF FY24 earnings conference call hosted by Equirus Securities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risk and uncertainties that are difficult to predict. I now hand over the conference call over to Lalit Dio from Equirus Securities. Thank you, and over to you.
So good afternoon, everyone, and thanks for joining the call. So to give a brief update on the 2Q FY24 results and address investor questions, we have with us from the management of Prudent Corporate Advisory Services Limited, represented by Mr. Sanjay Shah, Chairman and Managing Director, Mr. Shirish Patel, CEO and Whole-Time Director, Mr. Chirag Shah, Whole-Time Director, Mr. Chirag Kothari, CFO, and Mr. Parth Parekh from Investor Relations. Now, we would request the management to start with the opening comments, post which we can open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Lalit. Thank you very much, and let me welcome all of you to this second quarter of FY24 earnings call of Prudent Corporate Advisory Services Limited. I thank you for sparing your valuable time to join us today. I hope you all have gotten access to the investor presentation which we have uploaded on the exchange yesterday, because when I'll be talking about the initial commentary, I'll be giving a lot of reference to the slide which is already provided. So before I move to the financial and the KPI numbers, let me cover a couple of new slides which we have added in this presentation. So kindly move to slide number 23. So it's a slide wherein we have provided the data on how Prudent has performed vis-a-vis all the major peers in last decade, that is from FY 2013 to FY 2023, in terms of commission earned as well as on account of average AUM. And these are the data based on the information provided by MFI in their yearly commission disclosure. So if you look at, I think in last decade, Prudent has moved from... If you look at in FY13, we were somewhere closer to about 20th on earning numbers. We moved to a 4th rank in commission income in last financial year. So that was important data. We thought we'll just cover that. So kindly now move to slide number 29. Now, there is also the another data which we try to capture. So it's an important slide which explains that mutual fund distributors, which is the core business for us, a lot of distributors who work with us, and that's the core segment of our business. So for us, the mutual fund distributor becomes mature in our system, and once they cross certain threshold of AUM, let us say, for example, 10 crore, then productivity of those distributors on all counts, like whether you talk about the gross sales or the average AUM per client or the average SIP amount, they fare much better compared to others. So this is the very vital and the important information which we have provided. And if I tell you about the numbers, as on September 2023, Prudent had 1,265 mutual fund distributors whose AUM was more than 10 crore. And if I tell you about the same number before, let's say, 4 years, that is, let's say in 2019, that number was only about 340. So just wanted to highlight that these are the people who are going to be more and more productive. So it's a very important landmark for the distributors in their career. Once they go past certain numbers, they become very, very productive. So among all, I think these 1,265 distributors will be very, very core from the point of productivity concern. So these are the two new data which we added. Now I'll take you to my routine business numbers and the KPIs. So let us straight away go to slide number 44. If you look at the slide 44, we have shared the details of our quarterly average AUM and the closing AUM. So if you see the chart on the right-hand side, our quarterly average AUM has grown by almost 29% on a year-on-year basis and 13% on a sequential basis to almost 66,590 crore. On standalone operations, we are starting our Q3 of current year with a very good tailwind, because as you see on the chart on the left-hand side, our closing AUM as on 30th September is almost 4% higher when compared to the quarterly average AUM of second quarter 2024. Now move to slide 45. So this slide talks about how we have shared this data, where we have said that how our equity AUM has moved on a year-on-year basis and on a sequential basis. So as seen on the left-hand side chart, equity AUM has moved higher by 32% on year-on-year to around 65,600 crores, wherein almost 70% plus movement in the AUM has been contributed by mark-to-market gains. Same way, if you look at on the sequential basis, our AUM has moved higher by about 11%, wherein close to about 8.4% has accrued because of mark-to-market gain. However, if you look at net sales numbers, which is provided for the quarter-on-quarter basis, so net sales has picked up sharply in second quarter. As seen in the chart, we have ended Q2 with an equity net sales of 1,400 crore, which is almost double than the first quarter of current year, which is April, May, June. So if you look at the current quarter, it has been led by a good growth in gross sales as well as lower redemptions. So I can just talk about the KPI. Now, look at our slide 46, which is a very important slide from the point of view of SIP. So on slide 46, if you look at the bottom left, we have given the data of our monthly SIP flow and our market share in the SIP. Currently, our monthly SIP flow has surpassed 600 crore when I am talking to you. At September end, our monthly SIP flow has grown by almost 30% year-on-year to 595 crore, and we added almost 140 crore of we added our 140 crore in our SIP book in last 1 year. Our market share in our overall SIP flows stood at 3.7% as on September end. However, if you look at, we assume that approximately 25% of current SIP book is coming from direct plan. So if I adjust and look at our market share in the regular plan, then we are touching almost 5% in the regular segment, which shows that our focus continuously remains very, very strong on driving the SIP for the growth of company. Another important point I want to highlight was the average value of new SIPs in the September quarter, which is almost 3,400 rupees, which has outpaced our existing average of 2,700, which suggests the rising confidence of our investors by allocating more and more towards SIP. In the sense, I am saying that the new SIP ticket size is also increasing rapidly. So despite we being strong in the SIP, we believe there is a significant legroom for us to grow, because if you look at one of the slides which we have provided the presentation, where still 50% of prudent investors are yet to start the SIP, or they do not have a live SIP. So looking to this, we feel that still there is a huge scope for us to grow SIP in our segment. So that untapped segment holds substantial promise for our expansion. By March 26, as we aim to achieve the aim of 1 lakh crore, we also foresee that our monthly SIP book will be crossing the landmark number of 1,000 crore. So now let me turn to the current financials. So before I address the consolidated financials number, let me address the standalone number first. So please move to slide number 49, which is the last slide of my presentation, which talks about the standalone number. Now, important point why I am moving to standalone, because let me first of all address the mutual fund, which is the significant business for us on the revenue side, mutual fund distribution business. So look at the revenue from operations in this segment, which has grown by almost 24% on a year-on-year basis. And this is mainly because of the robust growth of our average AUM by about 29%. Now, I wanted to highlight one important point, which is here, if you look at and you observe that our revenue has grown by slightly lower than the average AUM growth of 29%, resulting in the drop in our overall book yield. Now, I just wanted to explain the rationale for our yield, which has came down. So I'm sure a lot of guys would be aware about the SEBI's decision in last March 2023, wherein they have kept the incentives which they used to give for the business mobilized from B30 cities, beyond 30 cities. So SEBI has put that entire revenue structure in abeyance. So this decision of SEBI to keep B30 incentive structure in abeyance from 1st March has impacted our revenue. I'll give you the number also. If you look at my last year FY23 number, Prudent has earned close to 501 crore from mutual fund distribution business, wherein almost 40 crore has came because of B30 businesses. So that 40 crore was almost 8% of my revenue, and from 1st March 2023, gradually that amount has becoming lower and lower, because whatever business which we have booked till March 23, I think from March 23 to next 12 months will accrue the revenue of B30, but any business which has been booked new after that particular month, we will not get the B30. So actually, B30 revenue will totally vanish from our books by March 2024. That is what I just wanted to highlight. Now, look at the impact of this in the basis point. So last year on the total revenue front, Prudent's revenue was roughly in the range of 95 basis point, wherein the 8 basis point was because of B30 businesses. Now, let's say I'll tell you the current quarter, which is the July, August, September quarter. In this quarter, if we remove this B30 additional incentive, our yield on regular trail on the entire book has been at 87 basis point. Same was the case for last year also. Last year, my entire book was at 95 basis point, wherein 8 basis point was because of B30. So last year's yield was 87 basis point. Current year, whatever small amount which I have received because of B30, if I remove that, then again my yield comes to 87 basis point. So I just wanted to highlight that my trail income, which is a regular income linked to my entire book, that is very, very constant. So now let us look at other way around. If in this quarter, so in this quarter 2, X of B30 incentive or regular yield is 87 basis point. So let's say last year my yield was 8 basis point, which came down and it has dropped to 33 basis point in the current quarter. So in first 6 months we came down from 8 basis point to 3 basis point. Now let us assume that if this B30 revenue would have continued as it is, then our revenue would have been higher by 7.5 crore in the Q2 alone, which is almost about 5% of my top line. So that's why now I'm just trying to give you the explanation. Even though my average AUM has grown by 29%, my revenue grew at only 24%, right? If I add this B30 of another 5%, then I'm able to justify that the growth and the revenue would have been in line. So that is the reason I'm just trying to explain the prime reason behind the lag you are seeing between the revenue and the quarterly AUM growth. Also, please note that this 3 basis point of B30 incentive which we have on in this quarter, this is going to be lower in coming 2 quarters, and it will be completely nil from March 2024. So in FY25, assuming everything constant, our regular yield will be in the range of 87 to 88 basis points, which means in current year, we will absorb an impact of 8% of total revenue due to the 30 changes. So try and understand this is a big change, right? Because अगर AUM नहीं बढ़ा होता, so this change would have been glaringly visible, but the AUM growth was reasonably better. This 8% drop in revenue yield is not visible in the absolute numbers. So probably next year will be very, very critical, because in the current year still we are getting gradual revenue, but come March 2024 or April 24, there will be a nil revenue in full year next year. So next year, in the current year, so if you look at out of 8 basis point, 5 basis point impact is already absorbed by us in first 6 months, which is almost 60-70%, and in next 6 months we are going to still absorb another 3 basis point. So that was the one point I wanted to highlight as far as financials are concerned. Another important point I want to talk about, if you look at the expenses on the commission and fee expenses, I think the overall commission fee expense on a percentage terms has also gone up. So if you look at in percentage terms, my expenses on the commission and fee is almost about 62%, which is higher by about 1.59% on a year-on-year basis. Now this is mainly because of our change in the indirect direct mix. So in last 1 year, from I'm telling about January, JOS, July, August, September 2022 to July, August, September 2023, the share of indirect in the total AUM has gone up by 2.7% or 270 basis points. As you all are aware that in case of indirect business, we share roughly in the range of 65% of our revenue with our mutual distributor partners. So as our share in the total AUM from indirect has gone up by 2.7%, roughly I think the 1.5-1.6% cost has increased on the commission and brokerage side. So that is also another important point I wanted to highlight, that this is a new normal now. If our expenditure was 61% of our top line as a brokerage expenditure, it is now getting settled at 62%, and this is going to be a new normal because the share of indirect has settled at 2.7% higher. So that was the second point I have addressed. There is another point also on the other expenses front as far as standalone balance sheet is concerned. So I don't know, I think you must be aware, all of you must be aware about the one event which we do every year called Prudent Loyalty Coin Program or Prudent Loyalty Club, wherein we select our valued partners based on their business performances every year. In the current year, management has decided to make this program broad-based and get the more participation from the our mutual fund distributors, and we started giving some weightage to the existing AUM also. So based on this change, we assume that selection of partners and the cost on account of Prudent Loyalty Coin Program will almost double in the current year. So if I'll tell you about the cost on the balance sheet of or the P&L of Prudent last year was roughly in the range of 5.5 to 6 crore. This year we are assuming that this cost might go to 11-12 crore. So that is the reason, if you look at on the standalone balance sheet, my provisioning because of PLC has gone up by almost 3.5-4 crore. That's the reason I think the cost on the other expenses also significantly higher. So I think there are a lot of changes which has happened in the balance sheet on the P&L in the current year. So just wanted to highlight that in spite of there being a lot of headwind which came from withdrawal of B30, increased share of indirect in the overall AUM, and increase in other expenses, our operating profit has grown by about 14.7% on a year-on-year basis. Our standalone profit has grew by 26% year-on-year basis, led by a higher income, higher other income because of our treasury book, which has also started now growing. Because as you are aware that before 1.5-2 years when we acquired Carvi, our treasury book went to zero, and now again we got a very strong treasury book. So this is all about the standalone number. So I thought let me address the standalone number first, then I'll take you now to our console number. So now please move to our slide number 48, which is I think previous page slide, which talks about the console number. So on the standalone number, I address the mutual fund related matters which are required to address. Now on the insurance also, let me address something which is very, very critical, because as you all are aware that in the insurance, specifically in the life, one of our main product which we always concentrated is the non-participating saving products. So given the bumper bumper sales of the non-par saving product in last year of Q4, due to the taxation changes, we are witnessing a consolidation in this business in the current year, and which I think I have been trying, I think maintaining that stand from first quarter itself, that this is the year of consolidation when it comes to our insurance is concerned. So the phrase premium in Q2 in the LI has gone up by 68% on a sequential basis. However, it is down by almost 21% on a year-on-year basis. Please keep in mind that industry as a whole on the non-par saving product is also, I think, doing the business lower than the last year, because they are also probably, I don't have the exact number, but that number is not positive. They are also probably having the downward pressure on the business. So that is one part on the business front. Same way on the revenue side, I wanted to highlight that post-regulatory changes on the EOM front, entire insurance industry is still trying to adjust and absorb these changes. So regarding revenue for the insurance vertical, in absence of absolute clarity, revenue is provided by us in our books only when there is an absolute clarity and confirmation from the insurance companies. So these are the another point I wanted to highlight as far as your insurance vertical is concerned. On the general insurance front, we have been doing significantly better. As you all are aware that in the GI, we predominantly focus on the health insurance business, and that business is picking up very well for us. And we grew by almost 61% quarter-on-quarter in the fresh premium and 44% on year-on-year basis. On the GI front, our total book now has crossed 100 crores, which is a very, very positive number for us, because as you all are aware that health, even though it grows slowly and steadily, but it's a very strong renewal premium business for us, and 100 crore book is a very, very landmark number which we have achieved in the current quarter. So overall, if I just tell about the revenue from insurance, we grew almost about 79% year-on-year basis. Now coming to the broking segment also, while broking as a business has done fairly well for us, and its revenue has grown by 30% YOY basis, consequently our consolidated revenue has gone up by 29% on a year-on-year basis. Now coming to the other expenses on the consolidated level 2, you might have noticed that it is on a higher side, mainly because of one factor related to PLC, which I explained you, because it was the management call to revise the PLC. Same way, in case of insurance, in the current year, management has taken a call to spend a lot of money on branding awareness for the insurance vertical, and that's going to be a perpetual cost on our P&L. So that's the reason I think you might somewhat elevated level of expenses on the other expenses side. So finally, coming to the overall numbers, in case of insurance, in case of broking also, there was one of the item which was there is an impairment of money last year के अंदर करीबन 2 करोड़ का एक revenue था हमारा, which was because of recovery of or the reversal of impairment on account of IL&FS, जिसका 2 करोड़ का income था last year के अंदर. So if I assume that income would not have been there last year, then overall I think on the consolidated basis our profit has gone up by 28% on a half yearly basis and 11.6% on a quarter-on-quarter basis. So lastly, I think I'll just conclude my discussion on the financials, saying that we are getting closer to 1 lakh crore AUM by March 2026 as targeted by us, and we briefly touched 70,000 crore AUM during this month. We have generated a consolidated cash flow from operations of almost about 72 crore in first half of FY24, which is helping us to build strong treasury book for the inorganic acquisitions. Despite multiple adverse issues in the quarter, we are able to maintain a profitability growth and to be able to generate a first half growth of almost about 24%, and we expect to build and continue to build on this momentum going ahead. So thank you, and with this I'll open the floor for Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Dhaval from DSP. Please go ahead.
Thank you, Sanjay Bhai, for the opportunity. I just had 2 questions. One was, you explained about the direct indirect impact on the commission expense. So post the adjustment for B30 and this direct indirect impact, is it safe to assume that the net yields for the standalone business should be around the 32.5 bips kind of level on a steady state basis? So that's the first question. And second is this Prudent Loyalty Club provision. I remember last quarter also this there was some increase. So overall, what's the sort of rationale of doing it? Is it related to just better engagement or competitive pressure, etc.? Or do you see this to be a recurring event every time. So yeah, those are two questions.
So thank you, Dhaval. I think about the margin, you can say that now we assume that trail income would settle in the range of 87-88 basis point when the B30 is out of the picture, and I think the overall brokerage expenditure should settle at 62% on the book. So probably you can say that 38% of 88 basis point would be the new norm on the margin is concerned. Kitna better part? That is what I think we assume that roughly about 38% of 88 basis point. Kitna about?
33.4 आता है. Roughly, if you take 87, it's about 33 odd bits, 33.4.
So that is what is going to be new normal. So I think probably because I don't see a significant uptick as far as the mutual fund yield is concerned, without assuming any what you call the repricing of old assets or carry assets. Let us assume that it doesn't happen. Then the current yield of 87-88 basis points should be steady. And I think the indirect direct mix is now probably, I believe that there will not be a significant incremental change. 1 or 1.5 basis point here and there would be okay. So I think you can say that 62% should be the normal expenditure now. That was one part. On the PLC, because as you knew that PLC has become a really very well sought out event for our mutual fund distributor partners, and that bring a lot of energy in them. So we thought that to activate the entire system, we should make it little bit broad-based, and to make it broad-based, we started giving some points to their existing AUM. And because of that, we assume that the current year cost will go up. And once you change this, probably it has to be a perpetual in nature. So we assume that ये 10-11-12 crore का cost constant रहेगा. So these both things are both the things. I think the 62% of partner total brokerage expenses and 10 to 12 crore because of PLC. I think that has to be considered the regular expenses.
Understood. And therefore, the margin that we see in the current quarter as for the standalone business, by and large, that should be assumed as a steady state margin. Would that be fair?
Yeah, because I think the only thing would be that in the first 6 months, I think because now B30 impact is also to a large extent absorbed. So the
Correct.
new margin system will be the same. Yeah. On the standalone, I assume that it will be a steady now.
Understood. And just last question on the insurance bit. So, Sanjay, if you could just explain on a steady state basis what kind of margin that this business should operate. I mean, so this, like you explained, there is some slowdown that we've seen in the first half, the momentum. Just overall, what's your expectation on a steady state margin from this insurance business?
Though it's very difficult to answer that question because a lot of clarity which is required from the manufacturers, and they are also trying to absorb the EOM. But you can say that very difficult to say about the margin. Because actually, if you look at the brokerage cost on account of POS, which is at the GP level, is very less. So I think my cost on POS is hardly about 3.5 crore, and we require to spend a lot of money for business expansion purposes on the email, business expansion, business support activities, everything. So margin would be very, very difficult to say. On the business front, overall, I think we have done a reasonably well from Q1 to Q2. I think you might see some slowdown only because of exceptional business which has happened in last year. Otherwise, I think growth अच्छा है, and GI is doing very well. As I told you, we have crossed 100 crore mark on the GI book, which is a very, very healthy sign for us. I think Shirish, you want to add something here? I think related to insurance business, Shirish or Chirag Kumar.
Yeah, basically, I would say that the percentage payout is continued the way we were doing last year. Beginning of the year only, we anticipated that there would be a drop in the life insurance business because last year, especially because of the taxation, we got bumper business in the last quarter. So comparatively last year, this year, beginning of the year, the anticipation of the business was less. And third point, I would say that because of the EOM, the clarity would not come till the month of, I would say, August, September. So final clarity hardly has come in the month of August and September. So that is the reason, assuming the exact percentage payout margin, whether it will continue or not, as of now it will be difficult, but we are hoping that by this quarter, that is October to December quarter, the complete clarity on the EOM would be there. So hopefully we'll be able to give you a better idea. And then fourth point, I would say that incrementally you would have seen that the business done by the POS is also increasing, though it's a small business currently. If you compare the last quarter and this quarter, in the absolute term, the POS business is a small number, but the growth from the business of POS is increasing drastically. So as and when more and more business comes from the POS, I think you might see the changes in the percentage EBITDA margin also. So these are the points I would like to add.
Yeah, very useful, sir. Thank you. Thank you and all the very best. Thank you.
Thank you very much. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Prayesh Jain from Motilal Oswal. Please go ahead.
Yeah, congratulations, Sanjay bhai, good numbers. Just a few questions from my side. Firstly, on the insurance business, you had mentioned earlier that you have seen an increase in commission rates. Now we are seeing that there's some clarity yet to be expected. Do we see that these rates that you have reported in the first half are not sustainable, or how should we think about it?
No, it's other way around. Rather, that's why I say that whatever we have provided in the books of account is absolutely after getting the clear clarity from the insurance companies. So I'm not saying that in the coming quarters, whatever the yield which we have reported would drop. I think the yield would probably remain steady. Rather, there is a possibility of it getting improved. So I think the कोई confusion नहीं है. जो amount हमने report किया हुआ है वो clearly there is EOM related clarity also from the insurance and वही clarity clear amount हमने report किया. So I think वहाँ पर drop होने की कोई गुंजाइश नहीं है.
Okay, got that. Secondly, on the SIP business, we see that your market share is very steady at around 3.7%. Any strategies or that you are implementing with your partners to increase the thrust on the SIPs? You might be doing specific things on a sustained basis, but something specific that you want to highlight that you would be pushing to increase the SIP share?
Sirish?
Yeah. So first of all, I would say that the focus for SIP business is there in Prudent for last many years.
Yes.
Last 1.5, 2 years, the increased focus for the SIP is there. At the ground level, dedicated focus is given to the SIP. That is one. Second, I think this is also related to the PLC cost escalation question also. So if you see, I think the major weightage also in the PLC qualification is also towards the SIP addition. If you look at our SIP addition in this year, in the last 6.5 months, I would say that almost 80% of what we added last year. That itself says that in first 6.5 months, we have added almost 80% of our SIP net addition, what we did in the entire year. That itself says that the focus for SIP has increased, and indirectly, obviously, I think the PLC cost, because of that also has increased a little bit.
Shirish, what would be the cost of PLC in the first half?
Ultimately, it is proportion to the assumed cost. So I think basically, if you look at, normally we provide the cost based on the business expectations. So there are two parameters which has done very, very well in this quarter. One is if you look at our net sales number compared to last quarter, this quarter it has increased. That is one. Second, even if you look at the SIP flows compared to last quarter, it has increased drastically in the second quarter. That also has increased the PLC cost in this quarter. Third, as Sanjay bhai said, that we started adding making it broad-based. We have gone a little aggressive because we wanted to get the focus on a multiple product. So that also has escalated the PLC cost. So that is the reason there is some hike in the cost in this quarter.
Okay. Lastly, if I look at your other financial and non-financial products, which is now at quarterly run rate of around 5.7 crores, has been flattish on a sequential basis. We've been adding more products. I think loan has also got activated, right? Loan distribution. AIF PMS industry has been growing at an exponential pace. So why is that so flattish in this quarter on a sequential basis? And what are your thoughts as to whether the stock broking and other financial products together, what kind of share you will have from these products, say 3 years down the line?
Yes, it is.
Yeah. So if you look at stockbroking business, it's a conscious focus to move from that Prudent broking, which is a subsidiary business, to the Prudent corporate through Funds Bazaar platform. So specifically from January 2023, when we launched stockbroking on our Funds Bazaar platform, since then we are pushing very, very aggressively stockbroking business on the Funds Bazaar platform. So as of now, we are in the mode of account opening. So as you know that earlier Prudent used to do the business as a subsidiary Prudent broking. It's a traditional way of doing the business. Now the entire focus is on getting all those clients on the Funds Bazaar wherein they are doing the mutual fund and other product transactions. We ask them to open the accounts on stockbroking. So there is a clear-cut focus for stockbroking. We are very, very confident that over a period of times, the broking revenue growth definitely would be far better compared to what we are seeing right now on the Prudent side. Coming to the other products, so I think we deal in multiple products. As you said that it is flattish compared to the last quarter. Basically, certain businesses like HDFC fixed deposit, which used to contribute some revenue to us in the first quarter, which is not there now. That could be one reason. Second is the property business. I think revenue realization, it's very, very small revenues, but yes, I think the revenue realization this quarter is little lesser. But the three main contributor to the other product revenue, all the three products are growing very, very fast. I would say PMSAF, which is one of the bigger contributor to the other product revenue, it is growing very fast. The liquid loan, that is a P2P platform, that also has grown significantly. And third business, I would say that the secondary bond. So these are the three main products which contribute the other products, and all the three businesses are doing great.
What is the PMS and AIF AUM today? And how many clients would have subscribed to it?
We have recently crossed around 600 crores of AUM, and number of clients would be around 800.
Okay. Got that. Thank you so much and all the best.
Thank you.
Thank you very much. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Pallavi Deshpande from Samiksha Capital. Please go ahead.
Yes, sir. Thank you for taking my question. We just wanted to understand on the PSP addition, what is the plan going forward? How many do we plan to add? And also, I think you mentioned second that the marketing costs will be, for on the insurance side, that will be a perpetual cost. So, this, why is it suddenly become more necessary? Is it the competitive pressure? That's it.
Yes, it is.
First part I could not understand. If you can please clarify the first part.
Yeah, the POSP addition plans for next year. How many would
What
be?
addition? POSP.
Yes.
POSP.
Yeah. So basically, if you look at our constant focus is there to add the POSP numbers and also to increase their productivity. Out of our 28,000 ARN holders, if you see currently almost 9,000 odd people are converted to the POSP. So the number is increasing drastically. If you see our last year's number and this year, you would see the growth of almost 35-40% in for 6 months. So right now, the clear-cut focus is getting them certified for the POSP. Simultaneously, we are focusing to activate them. Now, today, if you look at the activation ratio of the POSP number, is very, very less. I think even if you look at the industry number also, the POSP industry also, there is a participation ratio is less. So constant efforts are there to increase the POSP participation or the activation, to make them active and to get more and more POSP. Yes, that is the reason we keep on spending on the marketing side. You say that it's a competition creation. I definitely would say that yes, I think we have got the skill, the way we have got the ranking in the mutual fund business. Obviously, we are aspired to get a similar kind of volume or similar kind of ranking in the insurance industry as well. Obviously, our primary focus always would remain to get more and more POSP and to get more and more business from them. So, yes, I think to get that aspiration, we have increased.
So the addition will continue at the same pace, 30 to 40% year-on-year growth in second half.
Definitely would continue, but as I said, this year you will see a drop in the life insurance business because of the extra bumper business what we had last year in the LI business. that adjustment would be there. Otherwise, if you look at our health insurance business, that has got seen a significant growth in this year, and that definitely is going to continue. Life insurance, this year there could be a consolidation, but otherwise, I think the growth of that 30-40%, that expectation always will be there.
Yes, sir. Yes, and the marketing, you said, that's a perpetual cost now. So
for the foreseeable future, you can see, at least as I said, we want to focus on POSP recruitment and the activation and the creating the brand of World and Genet. So I think at least for the foreseeable future, we are seeing it. We'll see. We'll revise the strategy. As of now, this is the strategy. I think we may review this after a year or so. Let's.
Yes, and how much would that cost be? 3 crores for the marketing?
So the percentage, I think it is not going to increase drastically from here. Whatever we have spent in this particular quarter, I think motamoti it might continue. I say that again depends on the volume we are able to generate. So we'll see. As I said, as of now, this is the plan.
And so how much was it spent this year, the marketing spend? This quarter or this first half?
It's already given in the other expenses. I think the cost and the other marketing cost is already part of that.
Right. Thank you, sir.
Thank you very much. A last reminder to all the participants, before we take the next question, a reminder to all the participants that you may press star and then 1 to ask a question.
आपण ज्या व्यक्तीसोबत बोलत आहात त्या व्यक्तीने आपला कॉल होल्डवर ठेवला आहे. कृपया लाईन.
The next question is from Rohan, who's an individual investor. Please go ahead.
Hello.
Hello.
Yeah.
Yeah, hi sir. Rohan here from Equirus.
Yeah.
I would just like to check one. Sir, on the direct indirect mix that you indicated on the mutual fund side, can you quantify that, how it has moved in the last 1 year? And also, secondly, was on the POSP contribution on the insurance business. How is it tracking around right now?
So the first part, I'll just tell you about the direct indirect mix. Actually, Rohan, indirect share. Now, say when I'm talking about the direct, what we have done is that for the sake of understanding, in case of Karvi, there are 2 sets of business. One is Karvi partner business, which we already transferred to. Once somebody has become a Prudent partner, we transfer business under his code, which is already mapped to indirect as a segment. That is number 1. Number 2, there are still almost about 4,000 crore of AUM of Karvi, which is kept as a lead for partner, where we are not paying anything, which I will consider as a part of my direct business. But it is not a direct business. It is going to virtually go to a partner. So if you look at I'll just give the January, say July, August, September, FY23 का मैं average बता रहा हूँ आपको. Last year, the indirect, pure to indirect was 84%. The Karvi was roughly about 4,200 crores, so it was 8.2%. And pure direct, which is my RM business, was about 4,000 crores, so odd 7.87%. Now this 83.92% is now at 86.63%. And that's the reason I explained that my share of indirect ex-Karvi, ex-direct has moved to 86.63%, which is 2.7% uptick, and 65% of that is roughly about 1.7% impact should be there on the payout, right? And that is actually about 1.5, 1.6%. So I think you got the point properly?
Yes, sir.
Hello?
Yes, sir. Yes, sir.
Yes, okay. Now, second question, I think Sri address. What is the percentage of business which comes from POSP? So one number which would indicate that POSP cost is roughly about 3.5 crore of last quarter as a commission payout, and the revenue of last quarter was roughly about kitna tha? Insurance revenue? So roughly about 13-14% or 15% business would be there. But Sirish, any you can, if you say something on this number? Or Chirag.
Thank you very much. The next question is from the line of Nilesh Chetani from POI MF. Go ahead.
Hi, good afternoon, and thanks for the opportunity. My first question was on the insurance piece. Wanted to understand, say, if you make 100 rupees as take rate in insurance.
Sir, I'm sorry to interrupt you, Mr. Chetani, but your voice is very low. Could you speak a bit from closer to the headset?
Am I audible now?
A little better, but still it sounds like you're speaking from a distance.
Yeah. No, not audible now. Operator, unable to listen.
I think he has dropped the line. Thank you very much. The next question is from the line of Alisha Mahawala from Envision Capital. Please go ahead.
Hi, sir. Good afternoon. Just wanted a clarification. In the other expenses for this quarter, how much of that was due to the increased marketing expense for insurance?
8 crore. 8 crore is the additional cost on account of marketing in the insurance segment for this quarter on the console, right? Yeah, 8 crore.
And since the insurance business is relatively more seasonal, when we see a pickup happening in H2, especially in Q4, do we expect the number also to start ballooning in H2?
Yeah, so I think, as I explained in the first quarter, it's basically if you spend money, business will increase. And so it's not that you spend because of business. You spend, that's the reason business happens. So I think this is going to be a part of, it has to increase only. So probably I think for that you need to look at a couple of commentary which has been given by the insurance companies also. So last year insurance company used to spend money for marketing and branding. Now that responsibility has been transferred to us. So probably that would be sufficient for me to give you the explanation that, because if you don't spend, you won't generate the branding and you won't generate the business.
So when we say we will spend on branding, what we are supposed to run marketing activities for the insurance company on ground.
Pardon?
I'm asking that if hello.
Yeah.
Just wanted to understand that when we say that the insurance company is asking us to spend on marketing, so are we supposed to run the on-ground activities to create awareness? And we'll be doing this specifically for different insurance companies.
No, it's for us, it's for our policy world, it's for people to become POSP workers. Yeah, for the different segment of insurance like term plan, savings plan. So it may not be for the particular insurance company, but the general awareness about the insurance as a segment, and for the Prudent GenX as a subsidiary, policy world as a platform.
Okay, thank you.
Thank you very much. The next question is from the line of Ajox Frederick from Sundaram Mutual Fund. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, just a repetition of the earlier question. You were telling the indirect mix proportion. Can you please repeat that for this quarter, last quarter?
So the last quarter number I haven't kept ready, but I'm talking about the YOY. So if you look at January, so I'm talking YOY, second quarter FY23, indirect was 83.92% in total AUM, which is now 86.63%. So the share of indirect has gone up by 2.7%. Now, I think previously whenever we discussed with the people, we said that indirect was already above 90%. So the number has been, there is some distortion when I'm talking about the number. The reason is, now when I'm talking about the indirect, I'm excluding Carvi, which is not yet given to my partners. Otherwise, that business is for a partner. So actually, if you look at I'm talking about the indirect X Carvi, X direct. And that's the reason that share has gone from 83.92% to 86.63% in last quarter. This is the daily average I'm talking about. And that's the reason the brokerage cost pressure came at 81.51%. I think now probably we might feel that this might gradually get settled in this range.
So, sir, if there is a 1% increase in indirect, the hit will be like 0.65% on revenue, right? or the delta, which is being paid to commissions?
Sorry. Again.
No, if the mix shifts by 1%, then the commission payout would increase by 0.65% of revenue.
Perfect.
Okay. So if that is the case, this is like about 1.6 into 2, right? Like 1.3, 1.5% of the current revenue is the impact. Is that right?
Yeah, you can say to that extent. Yeah, because roughly about... so the revenue would have gone up by, say, 2.7% into 85 basis points, which is my earning, right? So roughly I would have earned more, 1.59 is the impact actually. I'm just saying the 1.59% extra payout on account of brokerage expenditure has happened in this quarter versus last year. YOY.
1.5% of revenues, right? Of revenues.
Yes, 1.5% of revenue. Perfect. 1.5% of revenue.
Good. All right, sir. This is helpful.
If my revenue was 150 crore, my expenditure has gone up by 2.25 crore.
Okay, perfect. Thanks, sir. Got it. Understood. Thank you.
Yeah.
That's it.
Thank you very much. The next question is from the line of Nilesh Jethani from BOI Mutual Funds. Please go ahead.
Yeah, hi. Thanks for the opportunity. I hope I'm audible now.
Yeah, Nilesh, yes.
Okay. So my first question was on the insurance piece. Say if 100 rupees is our take rate in percentage term, what typically we pass out to the partners and what we retain?
So basically, if you look at our pass out, on an average, it's similar like mutual fund and the insurance. I think almost 2/3, 1/3 is the normal ratio, you can say.
Okay, so we keep 1/3 and 66-67%.
This is the normal ratio in both the products.
Okay, got it. And just wanted to understand from the distribution income, when I see on the mutual fund side, earlier we were keeping 65 and now the number seems to be 67, 68%. So wanted to understand directionally what impact was because of B30 and what is the other impact on this? Where this percentage of 65% of giving out is increased to 68% now.
No, the payout ratio still remains the same. As I said, even if you look at our previous quarter, also it would be 60, 2/3, 1/3, the same ratio continues. So there is no change in the percentage payout to our distributors. As Sanjay has explained earlier, there is a drop of around 2.25 to 2.5% share in the direct and indirect composition. When I say direct means B2C. Now the composition in our total AUM mix is now more skewed towards our retail, that is the B2B business. It is up by around 2.25 to 2.5%. So earlier on this 2% share or 2.4 to 5% AUM share, the payout was zero. Obviously, as the share of indirect or the B2C or B2B business has increased, that is where you are seeing that the percentage payout has increased. But technically, there is no change in the percentage cost paid to the distributor. I hope this gives you the answer.
Got it. And one last question on this other expenses which you highlighted that we want to broaden this and now 10 to 11 crores is going to be estimated expense. Just wanted to understand, so from a broader, from an annual perspective going ahead, what is the kind of number we are intending to look at or any percentage of revenue or something, or this 11 crores can increase going forward if we plan to adopt more and more people into this program. So how should one look into this piece?
So PLC cost is the output of the business. Normally, I'm not saying 100% is linked to the business done in the year. But yes, I think you can generate some kind of estimation based on the business number done during the year. There are multiple parameters. As Sanjay said that one component is the AUM. So as and when the AUM increases, some cost towards that AUM increase also adds the cost to the PLC. Additionally, as I said that if you look at our SIP numbers, the net SIP addition numbers, obviously we have added almost 75-80% just in first 6 months. So obviously we are comparing the annual cost of last year, the SIP composition cost. The PLC also has one component of SIP addition. As I said, I think 75-80% of the SIP business is done in last 6 months. So obviously that also has added the cost. Third point, I would say that the multi-product. Earlier, the focus on the multiple other products was not there. This year, to promote new products launched by Prudent, we also have given the weightage in the qualification criteria. Because of that also, some cost has escalated. So, moti giving the understanding, yes, I think that is linked to the business, but not 100%. Some part is also linked to the AUM. To get the guidance, moti, I think the growth in the cost should be similar to the business growth.
Got it. And from a very broader perspective on the partners business, wanted to understand, today, say we have X number of IFAs who are linked to us for mutual fund distribution, out of which what number would be also doing insurance? And on the insurance piece, on the POSP piece, we wanted to understand whom are we targeting going ahead? Is this people who are involved with other insurance are trying to target them, or it is more and more people who sell MF, we want to target them to start selling insurance? What's the thought process on that?
70-80% of our distributors who are registered with us for mutual funds do sell insurance, whether with Prudent or somewhere else, because originally they came from the LIC or life insurance company and then they started doing mutual funds. So technically, I would say that 70-80% of these distributors of Prudent are doing insurance. Now, our main target, instead of going out, focus on our distributors. So if you look at around 9,000 plus POSP, we have already empaneled out of this our 27,000 distributors. Activation is hardly 3,500-4,000. So in a year, around 4,000 distributors or the POSPs are activated as of now. So instead of me going out in the market and getting new POSP, our primary focus is adding POSP from our existing mutual fund distributor and making them active. These are the main target for as of now at least.
So just a follow up. So out of, say, you said 70-80% of mutual fund distributors with you guys are also doing insurance. So these people are contributing what percentage to the overall premium or overall commission?
They don't do business with us. Now, as I said that most of these guys were doing life insurance business earlier. Like today also they would be doing LIC business. Our business model is that attracting people from insurance industry to mutual fund industry. The guy continue doing business with LIC, but at the same time, since we have taught him mutual fund, he does mutual fund business with us. He's not doing LIC business today with us. All the 70-80% guys are not doing insurance business with us. So that is what our goal is, making them work for insurance with us.
So what is the percentage of people who do both for us and they actively contribute to the commissions or the premium?
That's what I said. 3,500 to 4,000 POSPs are active as of now, out of this 9,000.
Okay, got it. That was helpful. Thank you so much.
Thank you very much. The next question is from the line of Prateek Podar from Nippon India Mutual Fund. Please go ahead.
So just one small question. Maybe you can clarify or help me understand that this year, which is FY24, there is a sliding scale for B30 revenues being booked. Why is that so?
Pardon, sir, you said B30 revenue for the current year is?
You're booking it on a sliding basis, right, sir? In Q1, Q2, Q3, and Q4. And obviously in Q4, as you said, it will be minimalistic. So I'm just trying to understand why is that so.
So if you look at B30 was the trail revenue up to 2% for the business which you book from beyond 30 cities. So the regulator ने आपको B30 देना बंद कर दिया from 1st of March 2023. तो अगर आपने लास्ट ईयर फरवरी तक जो भी बिजनेस किया था उसके बाद 2% आपको मिलता रहेगा in form of trail until you complete first year.
Okay.
That's the reason I am saying you that all the business which I have done in last, for example, March 2022 को मैंने business किया तो उसमें मेरा 23 मिलेगा ऐसा करके. That way. That's the reason I think gradually amount is reducing and virtually it will be zero in March 2024.
And the fact. Yes, you're saying something.
Yeah, Pratik, you're saying something?
I was just asking you that this 8 basis point has been entirely passed on to the MFDs, right?
Yeah, I think to a large extent, not entirely. So our earning in B30 was not as high as our regular business, where, as Siri said, we share 2/3, 1/3. Here, sharing was a bit on a higher side, but the impact on top line was visible, right? On the bottom line, when I'm talking about the cost, I am just considering the indirect mix change. So, but you are right, वहाँ पर margin तो था ही मेरा. Not 35%, but must be in the range of 20-25%.
Okay. Okay. And hence we are seeing a lower dilution in your net yields.
Pardon?
Sir, your net yields, right? The net yields which you make.
So net yield which I make would be now, that's why I'm thinking if I am earning 100 rupees, my payout would now settle at 62%. So I'll continue to at 38%. So now probably you need to consider only 87, 88 basis points as the trail revenue. Uska 38% मान के चलिए.
Okay, sir. Got
it. So B30 is now out. अगर छोटा सा मेरा earning होगा भी तो भी, so actually the B30 impact on a YOY basis would be very profound next quarter compared to YOY, because first quarter में I earned net, let's say about 6 paisa. In second quarter I earned about 3 paisa. In third quarter it will hardly about 1.5 paisa, and fourth quarter it will be 0. But in the last year YOY I used to earn 8 paisa full. So when I go to next quarter, आपको 8 के सामने सिर्फ 1.5 पैसा दिखेगा, तो there will be a profound impact which will be on a YOY, not on a quarter on quarter.
But sir, your net yields are not changing, right? That is the question. Because the payouts are as a percentage of the 87, 88 basis point. So essentially, your net yields don't change a lot relative to your top line.
Yes, sir, you are right. The net yield won't change significantly. Obviously, 8% receivable. The brokerage receipt was B30, that will become 0. So practically, if you look at the revenue drop in the last quarter would be 8%. At the same time, the majority of that receipt was passed on to the distributor, so that won't affect our margin, percentage margin impact. It would be very, very minimal.
Yeah, that's what the question was. Okay, sir. Very helpful. Thank you. Thank you.
Thank you very much. The next question is from the line of Ajox Frederick from Sundaram Mutual Fund. Please go ahead.
Sorry, sir. Just a follow-up. You mentioned that this payout is higher in B30, what we pass to the distributors. Is it 75% or 80%? Can you quantify that number? Like normally we pass 65%. In B30, that is what, 75, 85?
There are two components. Earlier,
margin should be in the range of 20-25%, I'm just saying, roughly. Yes, okay, yes it is.
In total payouts till March 20, there were two components. One is the normal commission, which is the perpetual trail or the long-term trail. And second was the B30. And the B30 payout was only restricted to 1 year. So whatever business you do, the B30 receivable used to be only for 1 year. Now both the components were different. So what historically we have been telling you that 2/3, 1/3 is the perpetual or the long-term tail, and that is what our sharing ratio on the book level, on the B2B business level. When it comes to the B30 payouts, historically we normally used to keep a very, very close track on what the AMCs are paying to the distributors in the smaller locations. So, and that is where, as Sanjay said, that the retention was around 20-25% in the B30 business. But that was not stable because that also dependent on the AMC strategy on the IFA level. But having said that, now I think in this financial year, from every new business from 1st of March 2023, that revenue on the new business has become 0. Whatever business we did till February 2023, on a residual period, I think total payout would be for 12 months. For the residual period, it would be available. So that revenue pool will keep on shrinking till February 2028, and 1st of March it will become 0. So the net revenue generated in this quarter from B30 business would be hardly anything, and next quarter it will become practically end of 0. So the payout range is higher on the B30 business because of that strategy used to be linked with the AMC strategy.
Got it, sir. Very helpful. And this delta or the yield drop is purely because of mix shift and this B30, nothing else, right? Only these two parameters.
Yield drop, as Sanjay has already communicated, one is the biggest thing is the AUM mix between B2C and B2B business. 2.5% tilt towards the retail, that is B2B business, obviously, because on that business you pay out. So one major reason is that, and second you can say about is B30.
B30.
Yeah. Hello?
Hello?
Yeah, is it clear?
Yes.
Yeah, it's clear, sir. Thank you.
Thank you very much. We will take this as the last question. I would now like to hand the conference over to Mr. Sanjay Shah for the closing comments.
Sorry, so you're taking last question, right? Then?
No, it is done.
No.
That was the last question. I would like to hand over the conference over to Mr. Sanjay Shah for the closing comments.
No, thank you everybody for patiently listening to our commentary. So if you have any query further, I think Pars and the management is available to clarify on any of the matter which you require to be. Thank you very much. Thank you.
On behalf of Equirus Securities Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.